The price of silver reached a new record today following a chaotic hours-long halt in trading futures on the CME's Comex exchange. Let's go to Brooke Thackray, research analyst at Horizons ETF, for more on this. Brooke, let's start with silver having a high, having its moment in the sun. 56.5 is where I last saw it. Can you share more insight on what's been driving this?
Well, first of all, from a broad perspective, what we've seen is, the Fed cutting rates. Perhaps the probability has been increased, just like that's provided a tailwind for gold. We've seen that with silver. Silver's been undervalued relative to gold, and so investors like that. And we saw that breakout to an all-time high for silver, and that's a very positive breakout. So we saw investors pile into it. Now, I got to tell you, with the CME outage, power outage this morning, what we saw was a whole bunch of rumors being passed around that there was shortages of silver, so they shut down the exchange. These are rumors. And the community really, the network is a really tight community for silver, so they really piled in and pushed that stock up. Now, if you remember a couple of years ago, we saw the retail investors do a short squeeze on silver, pushing the price up. And that's a little bit what happened today, I think, with retail investors, because it's a very thinly traded market today. Here we are on a holiday weekend for the U.S., very thinly traded. So the retail investors are moving this around.
Okay, let's get to the big tech story, because I want your take on the separation we're beginning to see. We're seeing NVIDIA definitely not sort of flying as high as it was during parts of the year, but some of the other Mag 7 are getting to new record highs. So what are you noticing here?
Well, if you take a look, I think we're starting to see overall, from a broad perspective, we're seeing some challenges, some questioning of the narrative about NVIDIA, about AI overall, about is it profitable, do we have enough energy, all of those major macro questions. Before there was, hey, we just need more chips and more money and we'll all be fine. There's starting to be some real questioning around that. And even this week, we saw NVIDIA put out a memo they distributed to 60 Wall Street analysts saying that we're not a fraud. We're a good company, basically, because there's been this narrative around this. And then when we saw Google come along and they've launched Gemini here, and brand new Gemini AI, it's supposed to be pretty good. And so that's attracting attention. But that's not the big story. The big story is what they've done with the chips. So they've created their own in-house TMU chips to compete against NVIDIA. They require a lot less power than NVIDIA chips, and they're cheaper. Now, they don't do exactly the same job, and they're really used in training of AI. But this is before we had the narrative, well, it's only NVIDIA or nothing. But now investors are realizing that's just not the case. There is competition, and we're looking at even Meta talking about, well, they might be using Google chips down the road as well for some of their work. So it's not just about NVIDIA. And I think that's probably what we've seen in November. We've seen Google straight up. That was partly Berkshire Hathaway coming in and buying this as well, and launching Gemini, buying with Google. But we saw Google head straight up and NVIDIA down. So it's like alligator jaws. And I think there might be more of that. At the end of the week here, we did see NVIDIA settle down a bit here. So there may be some stabilization, but I still think there might be some more narrative questioning around NVIDIA. And so we might see some further weakness here.
Are there also concerns arising about having enough energy for the build out for AI?
Absolutely. I mean, I think it was Morgan Stanley that came out and said that, over the next 5 years, we're well short of the energy. We're 20% short of expected energy. And we've seen a couple data centers sitting around waiting for energy hookup because there's not enough energy. In other words, we're starting to see bottlenecks in this whole process. It doesn't matter how many GPUs you make and put out there. If you don't have the energy to run them, it doesn't really matter. And so that's a big, big concern on a go-forward basis, because it takes time to build energy. We keep talking about nuclear, but nuclear takes 10, 15 years to build out. That's not what's needed. We needed a short-term solution. Even natural gas takes time to build that out to match up with the needs for AI, which have been ramping up. So there's a bottleneck, and that's a further questioning, basically, of that narrative.
Where are you landing these days on a cut in the U.S. Federal Reserve rate cut for next month? And what do you see aligning to your thoughts?
Well, this has been a really interesting situation because, a week and a half ago, the odds of a rate cut were approximately 50%, a coin flip. That they were going to cut. And then what we've seen, the market rally this week was largely based upon the expectation that the Federal Reserve will cut. So the odds have increased to 94%, according to the swaps market, that the Federal Reserve will cut on December the 10th. That's a huge move on that. So once it gets past 80% and you're close to the date, it's pretty well a done deal. It's very seldom would you ever see the Federal Reserve go against the market in such a big way in this case. So it's probably we're going to see a rate cut at this point. It'll matter about what the words go around it here. But this is what's been driving the market, just increased expectations of the Federal Reserve cut. At some point that gets priced in. And I think we're probably pretty close to that. So we might see the market actually now it's priced in a little bit. It might flatten out a little bit and wait for the narrative after in the press conference and see where they're going from here.
I was going to ask you whether or not you think the cuts will continue into 2026 in the U.S.
Well, within the year, they're expecting 3 cuts. It used to be 4, so it's 3. So what we've seen is this curve distort a little bit. So the immediate cut has been brought forward. There will be a couple more cuts expected next year as well, but they'll be spread out. So even though it's not like we're cutting one time in December, it's not like, okay, next year we're going to cut, and keep going from here. Well, it might depend on who gets the Federal Reserve chairperson's position, of course. There are some different people running for that position that really want to cut aggressively, but right now the market does not expect that to happen.
Brooke Thackray, got to leave it there, sir. Thank you for your time. Have a good weekend.